Yeah, so I think that the overwhelming demand and the future of latency is that speed is improving, latency is going down. I think the difference, though, is that the emphasis and the timing of that is different depending on the exchange, depending on the business model, depending on what the participants want to achieve. The big thing is that most people accept today that speed is an inherent part of modern day trading. And it's not just now focused on the high frequency trading strategies. Performance, efficiency, speed, health, risk, compliance are all the major factors today. What we are seeing is that different exchanges, different banks are placing different emphasis on the timing and the investment levels required to achieve speed. Once they make that investment, the next big thing, of course, is the monitoring, visibility, and the assurance of that investment, and also the ongoing assurance of it related to the business result. So if someone makes a major investment in reducing speed, then they want to see the corresponding return on investment. To do that, they need to have visibility. They need to have that visibility from their own infrastructure perspective and also from the services that they take on. So I think that's where we see things going. Speed is improving, latency is decreasing, visibility demands are heightening. I think that there are specific markets in Asia where people have chosen to make investments earlier rather than later. And I think the question of whether someone is ahead or not, you can say someone's ahead, saying from a speed perspective, and then there's also the question, are they ahead from a business perspective? I think one obvious showcase within the Asian markets that we've been quite close to is the work that's happening within SGX. Obviously, that market has decided that speed is an incredibly important factor in I would say, leveraging its business in moving itself up the table. They've made considerable investment in the new trading platform. They've made a considerable investment in the monitoring and the reporting of latency and the achievement of, I would say, best-in-class speed. I think in the event that we're at today here in Hong Kong, Bob Casely, the CIO, reported the achievement of less than 80 microseconds of latency within their four walls. So when an order hits the client gateway, from the point of view when they respond to that, it was recorded at 80 microseconds for 90% of the traffic. So I think that's a benchmark for the region. I think that you can look at other markets which equally, the CEO of Hong Kong Exchange highlighted that speed was important, but they don't need to be the fastest in the market to meet their goals and objectives. So there's various exchanges that are slower, but making investment as well to improve the performance and speed.